Hello everyone, welcome to Yadnya Investment Academy. Today we will discuss about impact of GST on inflation, tax evasion and black money. Recently, after the passage of GST through Parliament, there have been a lot of discussions on these three topics. The Prime Minister saying that GST will reduce black money, Finance Minister saying that it will reduce the tax evasion in the system, and RBI saying that impact of GST on inflation will be minimal, but obviously it will depend on the rate of GST, which will be finally decided by GST Council. So first we will discuss about the impact of GST on inflation, and we will see the both sides, the factors which are leading to higher inflation and factors which are leading to lower inflation. The extent of impact of GST on inflation will depend on the final rate of GST, which is not yet decided. We are assuming the most likely scenario of 18 to 20% tax rate. First, we will talk about the factors which are going to increase the inflation. The services will become more expensive as the current service tax is around 15%. After GST, it is going to be between 18 to 20%. So the industry like telecom, airline, insurance, health, education, software, etc. will become more expensive due to higher tax. The service component is around 30% in current CPI index, which is the most tracked inflation index in the country today. Also, there are other industries which currently enjoys lower tax rate and will be taxed more once GST comes in, such as clothing, footwear and electricity. Both these factors will increase the inflation in short term and medium term. Now we will talk about the factors which will help in reducing the prices. So industries like FMCG, automobile, entertainment, cement, etc. will enjoy lesser tax post GST implementation as their current taxes are between 25 to 30%. So this factor will somewhat offset the impact of other two factors which we discussed earlier in short term. Secondly, as we know, GST is a value added tax and also it's a uniform tax across all the states. So there will be a significant reduction on tax which is currently existing in the system, which will help in reducing overall tax liability. Third is the efficiency gains due to one tax, one nation structure, which will help in cost reduction of the goods. So these two factors will reduce the inflation in medium term and long term. So in the long term, there wouldn't be any impact of GST on inflation. But yes, in short term, there could be some impact. Like most of the estimates are saying that it could be between 0.2 to 0.3% on CPI if GST is kept at 18%, and it could be between 0.3 to 0.7% higher inflation if the GST is kept at 22%. And similar has been the experience of other countries which have recently implemented GST, such as Canada, Australia and New Zealand. Now we will discuss about how GST will reduce the circulation of black money as well as reduce the tax evasion. So before moving there, we need to understand how GST, which is a value added tax, works in both within the state or intrastate transactions or interstate transactions. We will first talk about how intrastate transaction works. Here we have taken the example of Maharashtra. So suppose a manufacturer in Mumbai who manufactures glass sheets has sold the glass sheets for ₹100 to other manufacturer in Pune who makes crockery out of those glass sheets. Now the manufacturer in Mumbai paid the state GST of 8%, which is ₹8, and central GST at 8% also, which is also ₹8. So he paid a total 16 rupees tax. Now Pune manufacturer added ₹100 value to it and sold it at ₹200 to a trader in Nagpur. So he attracted at the same rate of 8% ₹16 plus 16, which is a ₹32 tax. But since he has only added 100 rupees value and there is already a 16 rupees tax being paid by the earlier manufacturer, so this 16 rupees will be credited back to Pune manufacturer. So ultimate liability for him will be only 32 minus 16, which is rupees 16. So this is value added tax. Now let's discuss the case of interstate GST. Suppose the Pune manufacturer sells to a trader in Bhopal instead of Nagpur. So now what happens is this SGST and CGST will get replaced by IGST, which is interstate GST of suppose 16%, and it will be entirely collected by the center, and this amount will be credited back to the Pune manufacturer. So this is how the GST, which is a value added tax, works. Now we will look into how it impacts black money and tax evasion. So these are the features of GST. There will be a complete trail of all transactions at every level. So from manufacturer till the last retailer, all the credits as well as all the tax paid, there will be a complete trail. So for example, if a retailer has purchased goods from a wholesaler and is not showing that purchase today, but after GST he will not be able to do so, because if he wants tax credit, he need to maintain the book of sales for which proper bills will be generated. Secondly, the entire process of tax credit will be online through GST network, which is GSTN. So if a trader needs a tax credit, he needs to get registered on GSTN and then only he will get tax credit. So third is that there could be a possible PAN based registration for all the traders, so which will help in giving the complete picture for both of his income tax, which is his direct taxes, as well as his indirect taxes, and help the tax agencies to compare both the taxes and understand the anomalies. Currently, the state and central tax systems work in silos and they are not integrated and do not talk to each other. But with GST and GSTN, there will be an integration of state and central indirect taxes, which will help provide the complete picture. Currently, state monitor their own indirect taxes and center monitor their own indirect taxes. But now with GST, there will be a dual monitoring structure where at each stage, both state and center will monitor, and it may become difficult for the defaulters to get saved from both. The last factor, we will talk about the three sectors which create maximum black money in India, which are alcohol, real estate and precious metal. Alcohol is still kept out of GST, which may change in few years though. But with real estate and precious metal coming under GST purview, there could be a good reduction in black money circulation in India. For example, in real estate, the uniform tax structure will improve tax compliance by developers, local builders, property dealers, investors and occupiers. And the mandatory paper trail that GST will create will go a long way in improving tax compliance. So all these factors, in Finance Minister's words, will check leakages, increase tax base for both center and states, eliminate corruption and cascading effect of tax on tax, reduce tax evasion and improve ease of doing business, which will ultimately reduce the circulation of black money in India. Hope you find the video useful. If you have any comments or questions, please put that in the comment section below. Have an awesome time ahead.